MMTLP is different. Unlike typical stocks that rise or fall based on market sentiment, MMTLP was tied to a specific corporate action, the spin-off of assets into a private company called NextBridge Hydrocarbons. That distinction matters because when trading stopped, investors weren't just left holding losses, they were left without a market at all. This video examines what MMTLP was, what happened during the halt, and why unresolved questions remain, not about price, but about process. MMTLP originated as a placeholder security connected to assets formerly associated with metamaterials. It was never intended to be a traditional, long-term, publicly traded stock. Instead, it represented an interest tied to a future corporate action, the distribution of shares in a private company, NextBridge Hydrocarbons. As that spin-off approached, investors understood that MMTLP would eventually cease trading and convert into private shares. That conversion made timing, settlement, and position reconciliation critically important. As the spin-off drew closer, trading activity increased. Investors bought and sold MMTLP with the understanding that positions would need to be resolved before the transition to a private entity. According to public filings and widely circulated timelines, there were specific dates associated with eligibility, record-keeping, and distribution. In the days leading up to the conversion, trading volume and volatility intensified. Then, trading was halted. When the halt occurred, MMTLP stopped trading entirely. Retail investors could not sell. Price discovery stopped. Liquidity disappeared. This wasn't a gradual decline or a market-driven collapse. It was an abrupt end to public trading. Unlike typical halts, trading did not resume. And unlike most delistings, there was no alternative public venue where positions could be resolved. For investors holding MMTLP, the market effectively vanished. In most scenarios, short positions are resolved through buying in the open market. But when a security stops trading permanently, that mechanism no longer exists. This raises a structural question. How are open positions reconciled when there is no longer a market in which to close them? For long holders, the transition meant receiving shares in a private company. For any unresolved short positions, the path to closure became far less clear. To this day, investors continue to ask, were all positions properly reconciled before trading stopped? And if not, what mechanisms exist to ensure closure once trading is no longer possible? These are not questions of motive or blame. They are questions of market plumbing. In a system built on settlement, matching, and finality, a trade that cannot complete introduces uncertainty, not just for one security, but for confidence in the system itself. Once the spin-off was completed, NextBridge Hydrocarbons became a private company. Private shares do not trade on public exchanges. There is no ticker, no daily price, no public liquidity. For retail investors, that meant their MMTLP positions were converted into something fundamentally different. And for any unresolved public market positions, the absence of a trading venue created a unique challenge. Private shares cannot be purchased on the open market to close public obligations. That distinction sits at the center of the ongoing concern. This is not just about one ticker. It's about what happens when market processes intersect with corporate actions in unexpected ways. If a market halts permanently, how is closure guaranteed? If closure is not guaranteed, who bears that risk? And how transparent should that process be for investors who rely on fair and orderly markets? These questions extend beyond MMTLP. They touch market structure, settlement systems, and the balance between institutional flexibility and retail certainty. Supporters of the current system argue that rules were followed. Critics argue that outcomes matter as much as procedures. What remains unresolved is not a price dispute, but a structural one. When a market stops trading forever, how and for whom is the trade truly finished?